how to be successful in. Last time we talked about how to be successful in gap funding, basically unsecured lending and personal term lending. So I want to make sure you all can hear me because this one is actually going to be my favorite subject to talk about. I don't have any slides, but I will definitely send something over to Katrina and Alan for sure that you can hand out. It's like I talked about Alan before. It's kind of like our advertisements that we use to help reps go after different markets and different industries to garner and grow their business. But I'm going to go over, the next 10 or 15 minutes of just going over different industries that are really successful in the gap funding space. And you're probably familiar with them or you're not familiar with them, but if you are, we are asked lots of questions because this is a very, 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 very exciting topic. And at the same time, if you aren't familiar with it, you will get more information on it and more, I guess, marketing materials to help you with that. So just to start, basically what gap funding is, I don't know who was on the last call. It was 3 weeks ago, right, Katrina? Like about 3 weeks ago, I think, when we had the last call, the first call about how to be successful in gap funding. I'll go over a little brief overview of that, a summary of that. Basically, gap funding is our branding, Sequoia's branding, and when it comes to what we consider unsecured lending, consumer lending, business lending, and business line of credit. So basically unsecured non-recourse funding, meaning that you can use the money for any purpose. How a lot of the Sequoia reps use the money right now or use the funding right now is in real estate and an alternative to working capital, basically business line of credit or business funding. So that's great. That's a big industry. That's why we called it gap funding, is because it's a very popular real estate term, commercial and residential real estate term. So using the term gap funding draws a lot of people in, but the old 1980s and 90s, I don't know if any of you guys were born then, but the 1980s adage of gap funding just meant real estate, just meant having money to bridge the gap or transactional funding to take down your real estate deal. But we took that term and we turned it into something more encompassing of everything finance, very disruptive, like Alan says. So the gap funding term encompasses working capital, it encompasses real estate as well. It encompasses using the funds to get to where you need to be, either starting a business, either it's growing your business, start opening up a new location, using it to buy another truck if you're in the trucking industry. So you can really be disruptive in touching every market. And I don't care what market you're in, if you're in the medical field or real estate, or if you're in, a commercial loan officer, all of those fields are very important. But I'm telling you right now, you have the ability to touch every industry when it comes to the unsecured lending platform that we provide. Since it's cash and it's not line of credit and it's not an asset-based loan, you can basically tie this any industry that you want. But with that being said, my personal favorite is the trucking industry. So any vehicle industry. So and I'll explain why it's my favorite. You're like, that's kind of boring. But the reason why the trucking industry is my favorite is because when it comes to the trucking industry, there are a lot of changes. We are in this business to make the trucking business, I'm talking about fleet services, over-the-road haulers, even Amazon drivers. We're here to make this business a recession-proof business. Because in a recession, or when it's a downturn in the market, and if you're leasing or financing your truck, what's the first thing to go? That's the only asset you have, and the banks will take that from you. You're not making money, you're not making your payments. If you're in the trucking business, your truck is the first thing to go, and that's how you make your money. So what we do with the people that we talk to in fleet services and trucking industry, we say apply for gap funding, and based on your income, your credit, and everything as a trucking owner or a truck owner, or even if you contract out to other people and you use your truck to contract out to other companies, you can make your business recession proof. And how you make that business recession proof is Yes, basically, your owner operators, right? Paulie, I agree. You tell those owner operators, you have the capacity to own your truck. So if you buy your truck outright, instead of leasing it, and you get a loan through us, you own that truck now. You have the pink slip to that truck. You don't, it's not with the finance company or a leasing company anymore. And then in a recession, there's nothing for them to take. You might have some issues in making your payment, but now you can use your truck for other things. You can rent your truck out. You can do other things instead of hiding your truck in your garage or in another state. That was a joke, but basically you have the opportunity to to make your business recession proof by owning. So a truck is a prime example because it's in that sweet spot. Normally people get $50,000 to $100,000 depending on what their income is. And how that works is trucks are around 50 to 100, 150,000. You buy your truck outright, then you own it. You own your product, you own your name, you know everything all the way down to your truck. So that's my favorite industry. That even goes for the car industry. A lot of people are leasing cars and using them for Turo and other programs like that to rent. Now, yeah, that's fine. But if you have luxury rental cars and you're renting on Turo and you have a Turo business, what if that business takes a dip? What if gas prices spike? What if people stop renting? You got $3,000 in lease payments for cars that you have and no way to pay that. The finance company is going to come after that car. The lease company is going to come after that car. With us, yes, you're getting a loan to buy the car outright, and people always say cars are a liability, not an asset. But at the same time, if you're reducing it for income and for an investment and you're an entrepreneur, you're definitely winning because no one can come after you. You have your car, you own it outright, you're using it for this purpose, you're building up an income. It's profit minus your loan payment as an expense you write off, correct? So now you're looking at it as a business aspect, and you can able to build your Turo business or your car rental business by adding more vehicles with your revenue, with your income, and growing it that way and becoming an owner, starting out as an owner. So those are the vehicle industry. The trucking industry is one of my favorites because there are a lot of owner operators out there that are getting into wanting to just because of YouTube, let's be honest, wanting to get into the trucking industry. And it blows my mind. It blows my mind that we have these opportunities to change whole industries, not just people, not just, incomes, but whole industries. So, and my next favorite industry, and I know a lot of people are going to laugh at this, but my next favorite industry is the coaching industry. Coaching industry is really big, right? Because of YouTube, because of influencers and Instagram influencers and social media influencers. The coaching industry / consulting industry, right, is really big right now. And a lot of people are getting into coaching. I mean, I coach, so like I know a lot of people are getting into, so it's something that, I don't jump on a bandwagon on a lot of things, but coaching is really important. Business coaching, you coach on industries that you are a subject matter expert on. And a lot of these coaches, let's be honest, they charge a lot of money. I know coaches that charge $25,000 for their services. And stay with me here. I'm not asking you guys to tell your people to pay for coaching. I'm asking you that this is another line of financing where you can approach these people that are doing coaching and become their financier. You can tell them, look, you have a coaching business. There are a lot of people that are going to pay cash for your coaching business, or, clear out their savings or use a credit card to pay for your $5,000 coaching program. And you're missing a lot of money. So we tell them all the time when we approach coaches, not meet coaches in the grocery store, at the gym, everywhere. So that's my first line of defense with them. Oh, you're a coach. So, what is your cost of your services? And they give me their breakdown and their a la carte. And I always tell them, would you receive more business if you offer financing? And they were like, hands down, I would receive more business. Well, I always tell them, I can increase your business 30 to 40%. Right now, not tomorrow, not in 6 months, not in a year. I can increase your business by 30 to 40% right now, just by you offering financing. You don't have to pay for anything. They don't have to do anything. All you do is give them your Sequoia link, tell them to put that link on their website or put that link on their, on their advertisements, on their social media advertisements, and tell their people, if you can't afford cash for my coaching program, we can help you get finance for this, and take them through the same program you would take somebody applying for a real estate loan, or a gap funding loan to pay for their down payment and their closing costs or rehab costs. So this is like I can stop right here and you guys can just go with any industry. Like you can just pick an industry and ride with it. But, I'm just telling you my favorites. So basically this is another opportunity for you to add another stream of income in the industry that you're in, and the industry that you and you're thinking of getting into or looking into or you're familiar with. So the trucking industry, coaching industry, they're great industries. They're easy to approach, easy to talk to. My other favorite is the general contracting industry. That's nationwide. Everybody has either a general contractor, a roofer, or a framer or a handyman in their family. That's a high ticket item. I know a lot of contractors that go into a living room and sit down with the family and they say, look, that cabinet replacement or the flooring you want to do in your house, you're talking about $20,000, $30,000, $40,000. That's a big ticket item. There are a lot of finance companies like Hearth and I think Angie's List, they just started a finance company as well. But the biggest thing with those two companies which makes us better as a group, as a whole, is that they do a lot of, they have to pay for the system, they have to pay for their services, and they still put a lien on the property. Like Hearth, or the finance companies that a lot of these general contractors go to, and I know if there's some general contractors in here as well, in the call, that they can attest to this, but there are a lot of them where, you still have to put a mechanics lien. They still have to put up, even though they finance them, they still have to put up their own money because they're not getting all their money up front. So if they were applied through your gap funding link, then that person say, look, I need $50,000 for my rebuild or my remodel. They're getting cash. So that person can say, look, I have cash earmarked for this job. You get 25% of the job to start, and the rest when you finish, or you set up an agreement schedule or a schedule to pay, an inspection schedule to pay for the rest of the job. But if you look at it like this, they're receiving cash and they're using cash to pay for their remodel. So there's no need for a mechanics lien, there's no need for a lien, and there's no need for them to clear out their savings. They're using financing to pay for their remodel. And this is a win-win relationship because that contractor knows you're getting cash. So he's more apt to do the job. You know how much cash you're getting because you're working with him. And also you're increasing the value of your home. So whatever you're doing to your home, make sure they're doing value add. So that's another upsell that the contractor can use. And we give the contractor these tools. We give them, like, this is how you approach it. This is how you sell the financing arm, as opposed to them using the cash that they have in their savings or their 401k. So those are the three industries. But I actually started doing the gap funding with contractors because a lot of them were losing jobs and losing bids, and they wanted to know how can they win the bid without putting money out of their pocket, and how they can help the client get money on top of what they needed besides the remodel, and not be in control of that money. So now the client's in control of that financing and not a bank or a lien or a lien holder. So with that being said, I mean, we can talk about a lot of different industries and go on, but a lot of these industries that I talk about are industries that I'm familiar with. So I can go into another industry and try to be successful in that industry and try to speak the language. So I'll leave it up to you guys to use your imagination when it comes to what industries you can go after. But using this unsecured lending platform is a successful platform because that puts more money in your pocket. And say you are a general contractor, or you are in the construction industry, or people that wanting to purchase a few trucks, you can double end. You make your commission on your on the gap funding loan, and you make your commission on the truck sales. being a broker, and if you're a broker in that situation. So a lot of my brokers do that. A lot of my real estate brokers, they, somebody comes and apply for a loan with them, they don't have a dime for down payment. They're making money on the gap, they're making money on the real estate side and the loan side of their loan officer as well. So it's my whole thing is kind of tying it all up into one bow. And when it comes to a lot of like the new industries that are popping up in this e-commerce age that we have, a lot of people are looking into using e-commerce to create inventory. That's all over social media, right? You have a lot of people like, I started an e-commerce business, or I started an Etsy business, or I'm selling these products, or I'm buying products from, well, it's Temu now, not Wish anymore, because everybody's going to Temu now. So you're buying products in bulk from like Alibaba and things like that. You can insert yourself and take a few products from Temu or Alibaba or all these bulk service companies, and then you can take the products off of their website. You can advertise them on your page or on your social media and say you offer financing for these products. So they're buying, let's say they're buying, t-shirts in bulk by the 5,000 stack or 5,000 t-shirts at a time. You can take that ad, look at the price of those t-shirts and say, I offer financing for those people that are getting into the e-commerce industry, Oh, and Arturo just said, what about EV charging stations? If you talk about anything solar in this industry, there are so many finance companies attaching themselves to the solar industry. You could literally be the end all and be all for EV charging stations, for people that want to, like gas stations that want to put charging stations or want to put solar panels on their gas or their pump stalls, the roof. You can finance that. You can approach the gas station and say, would you like to put solar panels on your roof, or would you like to put EV charging stations at your gas stations? And then you approach an EV charging company, and then you can finance it for them. They don't have the money to pay for it, be their finance arm. So yes, any way you can insert yourself in any industry and increase their business by recommending that they offer financing is a really big a really big plus, and you're helping them out. I'm all about how can we set ourselves apart. And I think with the industry that we talked about previously, like, everybody knows real estate. And if if someone owns a business, getting them working capital or money to start the business and grow their business. But the trucking industry, the car industry, education or consulting industry, I know so many people that are putting their what do you call those things? They're putting their when I forgot the name of it, but I think it's they're not education, but they're putting their oh my God, I'm drawing such a blank. But people that put their education links and they're not their programs, but I think their tutorials or something online where they talk about I'm a subject matter expert, and instead of putting a book on Amazon or saying, instead of writing a book for a different thing, course, that's what I was trying to say. Thank you. They're putting their courses on Udemy. They put their courses on there, and then they want to become published and sell their course. You can be a finance arm for people that want to buy books in bulk or courses in bulk, or people that want to start their own course program. Insert yourself in that industry as well, education and consulting, and tell them, look, you get financing through us, and then we can help you start your own course business and become self-sufficient and become, independent. So I can go on and on. We've inserted ourselves in the gap funding space and marketing industry and franchising, obviously that, that speaks for itself, franchising, payroll, startups, even other finance companies that have a certain lane that they stay in and they want to expand. So you can offer the financing in those levels of expansion when it comes to, we have to do equipment leasing. So we do equipment leasing, right? What about those people that have equipment that don't qualify? That's how you insert yourselves in that as well. Okay, this equipment doesn't qualify. like the cannabis industry. Some cannabis equipment doesn't qualify for equipment leasing. So you can insert yourselves in that industry and say, okay, this is a cannabis industry that most finance companies won't touch, or equipment that they won't touch. So you can say you can finance the individual or the company with gap funding or unsecured lending, and then you can be the savior for them in that instance. But it's literally a great place to start, is to start with the industry that you know. And then I can walk you through all of the nuances of advertising to that industry so that you can be successful. And we can put you in a position to create the advertisement and create the social media advertisement, if it's print, social media, or a script. Either way it goes, we can put it all together. But I'm thinking we could be successful as a group and as a platform to bring all the different industries to us, either making them recession proof, either helping the business owner grow their business, or helping the business owner take advantage of this platform right here, because there's $1 trillion that's allocated to unsecured lending in the last 2 years. And even though interest rates are rising, Fed rates are rising, things are happening, the fact is that they're still lending. So high ticket items, mid-level items, anywhere between $5,000 to $250,000 items, or business ventures, stick in that range, you'll be successful. And honestly, that's all. I'm gonna read a couple questions. I have Pastor Anita. She says, business owners that need working capital yet are overextended on their credit. What would be the minimum credit requirements to even be considered for financing? Yes, a lot of people, business owners that need working capital, they are extended on their credit, and in certain instances where their debt to income ratio might be a little too high for them to qualify, I would do double duty. If they have a spouse that's a wage earner, put the application together, make both of them qualify, and then they can in turn receive the benefits of a higher income, or the higher income to qualify for more gap funding. Once they qualify for more gap funding, use half of the money that they get to pay down their debt. So it increases their credit score, lowers their usage, and lowers their overall usage, and then they in turn can apply for more funding. So, I mean, it's always an opportunity to come back to the funding table multiple times. If they have a business and their business has been around for a while, they can use a business line of credit, let them qualify for the business line of credit that's unsecured. And then say if they get $20,000 there, that won't show up anywhere, right? Because they're establishing business credit. So if they do that first, then they can come back and use that money to either increase their credit, pay down their usage, or use that for whatever purpose they need to create, or buy new income, or buy new equipment, or working capital to grow the business. So there's different avenues. Remember, there's 4 different ways. There's unsecured personal, there's unsecured business, there's personal line of credit, and then there's business line of credit. So whenever you have a client that's a wage earner and they have a business, make sure you put on the application that they're both, because once they send their application in, our back office will always ask, do you want to apply for both unsecured and business? And they always say, well, I don't know why, or which one to use. Well, yes, apply for both. If your business has a EIN number, articles of organization or incorporation, entity docs, and or business license, depending on what state you're in, always qualify for it. The worst you can get is a no, but always qualify for it, because there's a chance and possibility you'll get something that's not associated with your DTI. And and she also said, we're surrounded by these businesses that need our assistance. Yes. So just let them fill out the application, get it in, and then we'll work through the nuances with them and handhold them through the thing. And then James says, what about internet marketing? Very much so. It's a recession-proof business on its own, because there's no overhead, but there's a lot of programs and a lot of monthly expenses you have to get into. So I would always say use this for that. They just have to see the bigger picture and getting financing for internet marketing, so that's fine. And then Arturo said, I'm an owner with Yerrick Geo Energy. Yeah, I actually know the owner, and he's he is a mentor of mine. So obviously everybody knows him. Everybody knows Mr. Rustin. he's actually used this to build up a lot of the businesses, but he knows that when he was going with the solar business and with this, that this is the way to go. So I would bring it up to him again and tell him to use this. But yeah, no worries, Agatha. It's unsecured personal, unsecured business, personal line of credit, and business line of credit. She said repeat the four areas of funding. And I always, if they have a business, I always go for both. If they have personal credit, if they just apply for personal unsecured, meaning the regular gap funding, I always just go for the personal. If they have a really low DTI on their credit, on the credit report, then I always say apply for both. High DTI will get you denied for line of credit, but a higher DTI won't always get you a denial. It'll just get you something. You know, it might not be everything you need, but it'll get you something on that scale. So if all things considered, most, you know, you might get a client owns a company or has great credit, great income, and they have really great credit, they'll apply for all four and get all four. The record I've seen in the last year, I would say, is 550,000 across all platforms. That's an extreme case. I never tell people to go for, you know, just to say I want 500,000. I tell them, look, if you're just starting out with this financing arm, get what you qualify for, build on that, and then increase your credit rating, increase your unsecured lending rating. Unsecured is different from mortgage. It's different from having a car, or it's different from installment loans. People don't understand that. If you have a mortgage for 500,000, but you have no installment debt, it's hard for you to get an installment loan, right? So it just depends on what you're looking at. You know, what you're looking at, spread it out across the board. That's what they tell everyone, to use the secure platform to increase your credit if you're just starting out. But Paulie, I didn't read your thing all the way. I'm sorry. My current client that I have under contract for a hard money loan, their FICO is 525 because utilization. Yeah, that's the biggest thing. People don't understand that. Because it's unsecured, it's like, I would say it's the A paper of A paper loans. If they're a wage earner, they have to have a 650 or higher credit score. I would tell them, look, go find a partner with them on your hard money transaction. If they have a great credit score, you offer them 25% of your deal, and then you partner up. But that's the only thing. I mean, the 525 is hard because, you know, there's no avenue for gap funding for them, because even with self-employed, everyone knows that self-employed, you need a 700. But if you're strictly self-employed and there's only self-employed income you're using, you need a 700. You need a 650 if it's personal. But I would tell them, look, if you have a hard money loan, there's nothing short of partners they can partner up with. It's better to give somebody with a 650 higher credit score 25% of your deal, and then write a contract with them, you know, to work with them. But that, you know, that's the only thing I can suggest in that situation. But the biggest thing with that is you can still use someone else's money. You know, they can JV just to get the contract and get the deal, and then turn around and use that profit to increase their credit score once they do it. But yeah, it's 650 and higher is the rule. It's a hard and fast rule too. I have a client right now with a 700 credit score and I think a 680 credit score, and their low is like a 590. They got denied because they have to have 650 across all boards. So, you know, and Agatha says, do you ever use land as collateral? We don't need collateral for our loans at all. They're non-collateralized, non-recourse loans. So these loans are cash. Honestly, that person can walk away and never pay the loan again. There's nothing we can do other than say that they didn't make their payments. And obviously that'll ruin your credit. I mean, that's not nothing, but obviously that's the only thing that will happen, because it's completely non-recourse and it's high risk. So it's not secured by anything. So you have to look at it like this. There are high fees on it, high interest rates, because it's high risk. So, but yeah, but regarding the scenarios, if you email me, on here, I'll just put my email on here. But if you email me and say I have an industry I'm thinking about going after, but I want to put, I'm sorry, I did that straight to Arturo, not to everyone. I want to go after an industry, and then I say, let me know more about what you're going after, and I will create a marketing materials, marketing flyers for you for that industry that you can use to advertise on social media, on your website, whatever you want to advertise. If you want to send something to them and create your own direct mail campaign, I can create that for you, because we already have lots of templates for those, and you can advertise any industry you want. And like I said in the beginning, we do scripts as well. We have generic scripts or industry specific scripts we can use to advertise to different industries that you are familiar with. Or if you want to learn your industry, that's up to you. If you want to advertise on all of them, I don't care. but my whole thing is diversify. Pick 2 or 3 industries that you know that are booming locally or nationwide, and just see how it goes. Market to them. I guarantee you it'll increase your business just by explaining the difference to them about having a client that using their savings as opposed to a client that can qualify for funding. But to go over Pastor Nita's question again, there are a lot of people that are business owners that write off everything, and they have low income, or they write off everything, low income, great credit, and high usage. I always tell those people, if you have a spouse, make sure your spouse is going along with you, or the spouse is a school teacher or something that has a wage on their job. Put them together so you can use that wage and income. Or I tell them just to apply for business line of credit, because the DTI doesn't matter with business line of credit, as long as you don't have any recent open trade lines, like recent credit cards with a high limit, or recent unsecured loans with a high limit. If you don't have any, then you'll get $50,000 to $100,000, and just like that, you're off and running. I get that a lot, Donald. And Donald has a question that says, if a potential client has an 800 score, will that be open for negotiation regarding finance interest rate? Absolutely not. 800 credit score, they're already going to get the lowest interest rate possible. That's the whole thing. They're going to get the lowest interest rate possible, and they're probably going to get the highest financing possible. So once they get that interest rate, trying to negotiate a lower interest rate is next to nothing. Like that, it won't happen. They'll get an option. They'll get more than one finance option. So they'll probably get like 6 or 7 different finance companies that'll, in our repertoire, that'll say, look, these are your options, your terms. And they can say, I don't like that one, I'll take that one, or I'll take just those 2 and not the other 4. They have that option, yes. But 800 credit score, the higher your credit score, the better your interest rate. The interest rates are between 6 and 16%. 650 credit score is definitely going to get a 12, 14, 15%. But yeah, we get people that want to negotiate all the time. And I'm like, we don't set the rates. If we set the rates, we'll just give everybody any rate, Yes. I know that Alan did one before on the very first video. Somebody's asking, can you send a description of each of the gap loans that are unsecured loans? Yes, I will send the bullet points to Katrina and Alan, and they'll disperse those. But I mean, you have my email address in here as well, info@gapfundingpartners.com. Email me, and then I can send you the descriptions as well by email. And I mean, if you guys don't have any more questions, that's literally all I have. So I just wanted to give you guys that exciting news. Next week we'll talk about we'll rehash the in-depth financing part of it. I think we're doing next week, right, Katrina? Next week, same time. I'll rehash the actual the actual financing terms, how the lenders are approached, what the clients should expect on the once they're approved, and what the clients should expect once they sign your agreement, the time frames and fundings, so you guys will have more knowledge when you get questions asked. But definitely email me about the industries you're looking into, and I'll see if we already have pre-made marketing, and if we don't, we'll create that. Or if you want to go after certain industries and you just don't have, like what should I do? We'll send you some ideas and send you some marketing materials, and you can use whichever ones you want. So
I have a
always listen.
question.
Yes, ma'am.
I have a question. When you were talking about coaching, are you talking about buses and that particular industry? I'm kind of not familiar
No,
with
I'm
it.
talking about like people that do like okay, I have a lot of people that do consulting / coaching. So
Okay.
they're like financial coaches, like somebody that wants to go into Airbnb business, they're Airbnb coaches, or they're coaches that do like financial coaches, credit coaching, and or they do business coaching. They coach for you. They're like a coach for you that if you want to start a business, or entrepreneur coaches, and they charge like 5, 6, 7, 8 up to 50. I've seen some charge $25,000 for
Okay.
the
So you
coaching
do
service.
that? You do that?
I don't do coaching for that. I do coaching for other things, for like, for loan officers and for real estate investors and things like that. But I don't charge for my fee because I don't think you should charge, but only because I make money because I partner with you and help you with that,
Oh,
like
okay.
what we do. But I mean, people that do that, I mean, more power to you. You can do that. But I'm just saying those people that charge those fees, I help them and say, look, offer financing your clients instead of having them clear out their savings account, right? Or instead of clearing out, their 401k just to pay for your coaching, have them apply for financing so they can at least, spread that money out over 3 to 7, 10 years, So so that's what, that's what I
Tyrone,
mean by,
I got a question.
you offer the financing for the coaching.
I got a question for the piggyback on what I was asking first time. Someone applied for an EV charging station with the large equipment, and he got declined. And so what's the difference between if he applied with gap funding?
Well, the difference is that it's only on the person's personal credit. It's not those EV companies that do that. It's a lien against the charger, right? So if you don't pay, they take the charger.
Right.
So those, in my instance, is a new industry. So a lot of those companies, they have to have the top notch client, right? Because they have to have a top notch client because they don't have any history or any data for that. So their guidelines are hard and fast. So our guidelines are different because you can use the money for any purpose. So how we spread it out is we say, you just have to have a 650 credit score higher. This is your income and this is your credit history. So this is how much money you're going to get, right? So ours is based on that, and you can use the money to purchase that. So the client qualifications are different. So that's the only difference, is that we have different client qualifications, and they have guidelines that are just their guidelines, not a broad range of guidelines and programs on the financing end.
Okay,
So,
thank you.
yeah. I'm sorry. I hope I clarified that.
Yeah, you got it.
No worries. No worries. Oh, Larita's asking for my email again. Oh, thanks, Alicia. She put it in it. My email is in the chat as well. So, and if you have any gap funding questions as well, if you have a client that you don't want to send in right away and you want to just say, would this be a good client to send in? They're kind of on the fence or on the border. Send an email to info@gapfundingpartners.com so we can basically look at that client beforehand, or you want to send a credit report over so us to look at it beforehand before you send it in, because they may have like 10 inquiries and you want to know, like, would this be a great candidate? So definitely send that over and I'll look at it beforehand. Alan does that to me all day long. Look at this client first. So that's like, I'm his credit partner. I just sit in my office here and just in the dungeon looking at credit reports all day. So, and income. So, and before I send it off, because our lenders are basically, I mean, they're pretty good at working with us, but I would rather us look at it first and look at everything first before we send it in. And if we send it in, we send it in because we don't know. We don't know everything, so we'll send it in and see what their opinion is on it. So definitely email me with everything. And I think that's about all. I have another question about funding outside. If the person lives in the US and they have, they file taxes in the US and they have a US credit report, we can fund them. We don't care what they use the money for. I tell people all the time, if you're talking about somebody that doesn't have any US credit and US income to verify, I can't fund them. I know Alan has other programs for that, but I can't fund them. But I can fund somebody that wants to buy abroad if they have US, credit report, social, and income that's taxable in this, in the US. So, but yeah, but I don't have any more questions. I know if Katrina had any more questions or comments, but
Okay,
I'm basically ready to hit the ground running with
I got
everybody.
one more question for you.
Of
You
course.
said, as long as you have US, what is it, credit report, financing, then you could build anywhere you want to?
Well, you can use the cash wherever you want because
You can
remember, we
use it.
give you cash. Yes.
Okay.
Yeah.
Okay, that's excellent. I never knew that. That opens up a lot of opportunity.
Yeah, yeah. You use so what you're doing is you're using your personal credit and your personal
Right.
income to become your own bank.
Gotcha.
And then, yeah. So, like people like that, if you want to do developments, commercial developments in other countries, especially countries, with a lower exchange rate than us, get
Mm-hmm.
10 people together, they all qualify for 200,000, they got $2
Mm-hmm.
million and then go invest.
Okay. You are a wealth of information.
So
Thank you.
do they have to have an LLC or do they just or they gotta have an LLC though, right?
No, they can do both. It's easier to get personal credit. I like I said, trucking is my favorite industry. Trucking and nursing is the favorite industries I use for getting qualified for unsecured lending because nurses, they have high income, steady income, and a lot of them are travel nurses.
Right.
So they usually have lower overhead and they have lower bills because they pay for everything with cash. They shouldn't be doing that, but they do. So they have a lot of money. And as you know, Pauline, truckers are the same way. A lot of them, have a small house that they go to every once in a while or apartment because they don't want anything, big or unstable. So they just, they have high income and they have high reserves because they don't spend their money and they don't have a lot of overhead when it comes to their personal credit and they able to get qualified better. So trucking and nursing, in my opinion, as far as the people that you approach that can get qualified for unsecured lending on the personal side is easy. And then some of them have a business too. That 1099, we consider that business, right? 1099 is considered business. um, uh, Sole proprietorship, that's still considered business. So you're doing both. So you're using their W-2 or 1099 income and using their Schedule C income and their business income to double dip. So,
Okay, thanks.
yeah, and Dow said, please give me some examples of nursing that need gap funding. All of them. Every nurse I know right now wants to start a residential assisted living facility. There you go. They're using their money in their pocket to start a residential assisted living. So now you can tell them, don't use your money in your pocket, use this money to start a home health care, a hospice care, or residential assisted living. They want to become entrepreneurs. They want to work for themselves. They want to start a VA housing program. You need $100,000 to start a VA housing program. Approach them and tell them, look, you can use your own credit and income to finance your own dreams, to be your own bank. Yeah. So yeah, but again, I don't have any more, but if you guys have questions, I'm here for them all.